Hello, welcome listeners and market participants to KBRA's European Credit Podcast, Conversations in European Credit. I'm Gordon Kerr, Head of European Research at KBRA, and today I am joined by Killian Walsh from our Asset-Backed Securities Ratings team.
Hello, everyone.
And Carl Cummins, also from our Asset-Backed Securities team.
Hello.
Today we will be covering the topic of autos, more specifically the performance of auto ABS transaction. For those of you that have not seen it yet, we have launched a new performance index, European Auto ABS Indices, which can be found on kbra.com, along with a number of related publications, such as our reports on battery electric vehicles. Jump on the website and have a look. The publication comprises both our European Auto Loan Index, our European Auto Lease Index, and some country-level performance indices. The report offers insight into the credit trends across securitized auto loan transactions in Europe and the UK. KBRA's European Auto ABS indices complement our collection of monthly credit indices that are focused on US credit performance in the auto, marketplace, consumer, solar, residential mortgage, and equipment loan and lease sectors. All right, now let's get the conversation started. Killian, let's start with a bit of background on the universe and what makes up the index. So to start off with, what brought about the choice to initiate this performance index, and what did we include?
Yeah, absolutely, Gordon. As listeners may or may not know, we have a number of performance indices published and well followed in the US. These range from solar ABS transactions, or MBS, the consumer marketplace, to auto ABS indices. Given the strong interest we're getting from these indices in the US, we decided it would be helpful to provide the market here in Europe with similar insights via performance indices. Given the strong following and investor interest in European autos, we thought it best to start here. So we set out to try and get the full market for auto financing transactions. Fortunately, due to data and reporting constraints, we're not able to capture 100% of the auto financing market, but we have definitely captured over 90% of the market, which I think is unique in itself, in that it essentially captures the whole ABS market rather than, say, indices, for example, on the back of transactions rated only by KBRA or by another agency. So this actually captures the whole market, which I think is unique and important in itself, and hopefully provides some level of deeper insight for investors in the market. We've broken the market down into both auto loan and auto lease transactions. The current population used to produce the indices includes 82 outstanding auto loan ABS transactions and 34 outstanding auto lease transactions.
That's great, Killian. So what does that represent in terms of notional amount?
In total, there's just over 70 billion in outstanding balances captured by our indices, just over 40 billion in auto loans and 30 billion in auto lease outstandings.
Okay, so everyone in Europe knows that the market is largely dominated by one country in particular, but where else are these transactions originated from?
Well, of course, you're right. The largest proportion of the market comes from Germany, making up over 42% of the loan market and 70% of the lease market. The UK is the next largest, with 23% of the loan market and 4% of the lease market. Then we have countries like Spain, which makes up 13% of the loan market, and Italy, which makes up 7% of the loan market. On the leasing side, the Dutch make up 10% and France 8%. After that, there are a broad spectrum of countries, each with a relatively small proportion relative to the other larger countries.
Interesting. And what about the types of loans? Is there anything we can say about the borrowers?
Yeah, auto loan ABS transactions primarily contain loans to consumers, while auto lease ABS transactions primarily contain leases to corporate, clients, and small businesses.
And what about the types of transactions that are included? Is there any characteristics that are notable?
The indices contain constituents from across the entire auto financing market landscape, which includes transactions with revolving periods, some of which are structured in the form of a master trust. The latest reported data shows that 82% of outstanding auto loan balances and 91% of outstanding auto lease balances are from revolving transactions.
Okay, thanks for that, Killian. Now turning to you, Carl, how do these indices work? Let's start with the data. Where is this coming from, and how are we screening candidates?
Thanks, Gordon. So, as Killian highlighted earlier, there can be challenges with the data. As this is a monthly index, we removed transactions that only report on a quarterly basis, noting that the vast majority of transactions in this asset class do report on a monthly basis. As to the data itself, ultimately this comes from the monthly investor reports produced on public transactions. KBRA sources this information from Intex on a monthly basis. The indices are weighted by each collateral pool's outstanding balance at the end of each month. New transactions are added as they are issued after an initial seasoning period of 6 months, while older transactions typically reduce in size and therefore carry a lower weighting as the transaction seasons. Transactions are then removed from the index once they are fully paid down.
Okay, great. So now what about the actual metrics that we're looking at? How are these calculated?
Okay, for starters, it's worth noting that we have structured this into two separate indices, as auto loan transactions and auto lease transactions, and the calculations are done for each independently. KBRA calculates the weighted average metrics for delinquencies between 30 to 59 days past due, 60 plus days past due, and annualized losses. The 30 to 59 day delinquency metric tracks the aggregate amount of loans reported as falling between 30 and 59 days overdue within the most recent reporting period, expressed as a percentage of the aggregate collateral's end of month balance. The 60 plus day delinquencies are calculated in the same fashion, expressed as a percentage of the end of month balance.
Okay, but with respect to losses, we have had to do a little bit of intervention on this metric.
So for annualized losses based on the information available, we've had to base it on either reported net loss data or calculated on a proxy basis using gross loss data. KBRA's annualized loss metric tracks current aggregate month losses net of recoveries, which are annualized and expressed as a percentage of the collateral's beginning of month balance. KBRA utilizes the reported annualized number. Where this data is not available, we use a gross loss metric as a proxy, in which reported current new default amounts are expressed as a percentage of the collateral's beginning of month balance. Out of the outstanding auto loan deals, that split was about 60-40 between using annualized net loss figures and a gross loss proxy. For outstanding auto lease deals, that split was about 90-10 between the net loss figures and the gross loss proxy.
Great. Anything else in the calculations that our listeners should really know about?
Yes, given we've incorporated not just euro currency collateral into our indices, we have had to account for the different currencies within the Eurozone and the UK. As a result, all balances are converted to euros using the beginning of year exchange rates published by Eurostat.
Okay, thanks, Carl. So now let's turn our attention to the purpose of the index to provide us with some insight into what's happening in the auto ABS market. Gillian, back to you. What are we seeing on the collateral front? What are the indices actually showing us?
Sure. To start with, it's worth noting that when you look at the data on our website, you can see the impact of the pandemic on 2020 and 2021 losses and delinquencies in both loans and leases. So let's begin with all the loan performance, as it's the larger of the two markets. Here we are seeing annualized losses currently of 0.47%, and which remain below their recent peak in July 2023, while delinquencies and losses have been on a rising trend in recent years since their lows in September 2021 of 0.22% for losses and August 2022 for 30 to 59 day delinquencies with 0.38% and April 2022 with 0.33% for 60 plus day delinquencies. They all remain well below the elevated levels in 2020 and the start of 2021.
Great. And what about the leases?
European Auto Lease Index data, annualized losses increased both month on month and year over year, but also remain below their pandemic impacted 2020 and 2021 levels. Annualized losses have remained generally flat since January, albeit with a 10 basis point increase month on month in March to 0.22%. Delinquencies between 30 and 59 days started 2024 0.31% and have since remained generally flat. Late stage delinquencies, i.e. 60 plus days, have increased to 0.38% in March from 0.34% in January.
Many thanks for that, Carl and Killian. As my colleagues have outlined in our conversation today, March remittance reports for KBRA's European auto ABS indices showed mixed performance across both auto loan and auto lease collateral. We've launched these indices as an extension of our popular indices from the US structured finance market. Please register on our website to receive the regular updates to these, and you can also go on and download the index level data. As we have outlined, the publication comprises both our European Auto Loan Index, European Auto Lease Index, and some country-level performance indicators, offering investors and market participants insights into the trends across securitized auto loan transactions in Europe and the UK. That's it from us today. As always, we hope these conversations in credit help to illuminate the many trends taking shape across the markets. For more in-depth coverage of the themes discussed today, or to learn more about our unique approach to credit, sign up to the KBRA website and read all our research. Have a topic idea or comment you'd like to share, or if you feel inspired for a discussion based on the conversation you just heard, then please reach out to me or one of the KBRA analysts on today's episode. Be sure to rate, share, and subscribe to the podcast so you can be notified when new content is available. Invite your colleagues as well. We'd love to count you all as informed listeners. This is Gordon Kerr, thanking you for being part of the conversation. Take care, everyone.